So I think we have got more generations in the workforce than probably any other time in my working career. Integrity, I think, is really important. So being seen to do the right thing is one thing, but actually doing the right thing. We are doing way more work in succession planning than we've ever done. I think volatility and uncertainty can definitely create opportunity.
Welcome to this edition of Leading Through Uncertainty. I'm Kate Burns, Chief Operating Officer at Odgers. This series is part of our ongoing effort to explore how senior leaders are navigating complexity, change and opportunity in today's world. Each conversation brings a unique perspective from across industries and geographies, and today I'm joined by someone who brings deep insight into leadership across the financial services sector. Anne, I'm going to let you introduce yourself.
Thank you, Kate. I lead our financial services practice globally for Odgers, so have oversight of the work that we do across the sector in all of the major financial centres.
And how long have you been at Odgers?
17 years.
A long time.
A long time, yeah, and 26 years in search.
Oh, fantastic. And so what drew you to this kind of work and why financial services?
Well, I think slightly unusually, I always wanted to be a headhunter. So I actually knew at university it was what I wanted to do. And I think it was that combination of getting the right person for the organisation to succeed and the right organisation for the person to grow and stretch and learn. And I think financial services has just always fascinated me because it's kind of at the heart of everything. It drives the economy. Every business needs it. We all need it at different parts of our lives to be able to buy houses and do lots of other important things.
And those 17 years, are there any standout moments for you?
Probably lots. I think, to be honest, when we're supporting chairs of boards or chief executive searches for complex international businesses, those are always just truly fascinating. And I think we have a very kind of privileged access to those companies in those situations.
And I mean, you talk about it being such a wide breadth financial services. So what the work you're doing, what types of businesses or leaders are you typically working with?
So we do a range of board, chief executive, executive committee and advisory searches. So typically we're working with the chairs, the nominations committees, the executive teams, sometimes their advisors, really to try and make sure that we're fully briefed and on point and making sure we're introducing the right people.
And the types of, and sort of what the range of businesses that you're sort of generally looking at?
Yeah, so it's very wide. I think our definition of financial services goes from banking to insurance, asset management, into payments, financial market infrastructure. We also do work with multilaterals, with financial regulators and even with finance ministries as well.
Oh, wow. And of course, you can say banks, but presumably banks goes from retail banks through to investment banks through to lots
exactly,
of broad...
every sort of part of that life cycle. And they can be very small, privately backed businesses, or they can be very big multinationals.
Mm-hmm. I mean, in that breadth and depth, I mean, they are the driving force of sort of the economy and what's going on. They always know what's happening, but there's always this sort of debate around that they tend to thrive on the volatility. We're seeing a lot of volatility right now. So do you see, I don't know, opportunity or sort of threat in this sector at the moment?
I guess a bit of both. But I think when people think of volatility being a positive for financial services, they think of capital markets and the returns that can be made in a volatile situation. I think volatility and uncertainty can definitely create opportunity. It can create consolidation opportunities. And certainly we've seen a lot of that, for example, in the wealth management market. It can create, as we've seen, an increase in private investment as well. So the private equity investment, for example, that's going into insurance at the moment. I think it also creates opportunity for people, whether that's to potentially have mobility, either by geography or by business sector within a business, or to reskill and upskill people as well, as the sort of changing needs of the business need to be reflected in the skills that they have.
And this is a difficult question, maybe. I'm not sure you've been asked this one, but you talked about looking at working with regulators as well as the institutions themselves. Is there a difference in the way that they approach volatility that you're seeing?
So I think we're seeing we're in an interesting space at the moment, because in general across the world, not just the UK, you've got a sense of deregulation and regulators being expected to create the conditions for growth. And that's quite a finely balanced thing. I think most businesses feel that as they are trying to become increasingly global, regulation is increasingly domestic, and that can be quite a tricky thing to balance in terms of the cost of compliance, in terms of just keeping up with what each jurisdiction requires, either in terms of data or information, or indeed the person they expect to be in front of them when it comes to kind of having meetings. But really, when you think about that sort of balance around growth, and it's been something certainly our government and the US government are talking about a lot, and having the right conditions, you've also just got to have the right risk appetite around that and recognise that if you introduce more risk into the system, then things like fraud are likely to increase. So it's not an easy one to work through.
No, and I'd be interested to see where you've seen moments sort of when that uncertainty or that sort of volatility has actually helped leaders or the organisations you're working with that really sharpen their focus. Are they is that something you've seen?
Well, I think it sort of forces you to work out what you're good at. And so that kind of strategic clarity is something that it brings. So I think a crisis essentially makes a leader think very carefully about what the business should be doing in the future and how they're going to deliver that, and the people and the skills that they'll need to make that happen as well. And potentially, the parts of the business that they shouldn't be active in moving forward as well.
And talking about the leaders in these businesses, what traits are proving most valuable? I mean, and we said it's a broad sector, but more generally, what traits are you seeing sort of being really valuable in financial services right now?
So I don't know if this is specific to financial services. I suspect some of these things would be translatable across a lot of different sectors. I think vision is really important. So being able to sort of clearly articulate to the whole business where it's going and what their role is in helping achieve that, I think would be one thing. Integrity, I think, is really important. So being seen to do the right thing is one thing, but actually doing the right thing. And so your customers, your staff, all feeling that integrity is genuine. Communication as well. So I think clarity of communication, and there's a sort of transparency angle there as well. I think people recognise leaders can't always talk about everything that's going on, but being clear with people and actively listening so that people feel they have a voice. And I think linked to that is creating an inclusive culture. In tricky times, resources are scarce, and you want to make sure that your workforce are kind of with you and everybody's heading in the right direction. So I think you need that engagement that really only comes when you've got that inclusive culture as well.
I mean, it's interesting, all of those traits, you haven't said to me technical expertise or understanding numbers or, I mean, so do you think emotional intelligence or those more human traits are more important now than technical expertise?
I think for leaders, almost certainly. I think the people who are running the organisation need to be business leaders first, and they may have done technical roles in their past, but they will have people within the organisation who can perform that function typically. There are some exceptions where that technical background can be super helpful. So maybe a chief risk officer, for example, but still that person's role is to see across the whole organisation and to be thinking to the future in terms of the emerging risks that the business is going to face, and to contribute across the whole agenda for the business and be part of that collective leadership running the organisation.
Do you think it's harder to be a leader in these volatile? I mean, are the expectations higher of a leader in these times, do you think?
I think, to be honest, throughout the period that I've been involved in search, the expectations on leaders just continue to grow. I think the world gets more complex. We face new challenges. And there's something about, I think, a more multi-generational workforce that creates some interesting challenges for leaders there as well.
You talked about multi-generational workforce, which I think is a very interesting point to sort of pick up on. How, you talked a little bit about it, could you go into a bit more detail about how the multi-generational workforce is changing the leadership dynamics in financial services?
So I think we have got more generations in the workforce than probably any other time in my working career, which I think is hugely positive, actually, and it gives very different perspectives on things. But it can be challenging. I think expectations can be different between people who are facing kind of different parts of their lives and different stages of their lives. They've got different kind of wants and needs from their employers. Potentially expect to have conversations in a different way. So I think things are much less hierarchical. I think there's more transparency. I think people are more willing to have difficult conversations than was the case in the past, which I think is a good thing, but it can make it quite challenging, I think, for leaders to try to make sure that they are adapting and being flexible, appreciating lots of different views and possibly moving to a slightly more sort of consensual style than maybe they might have needed to in a different environment.
And understanding those different perspectives, because I think sometimes it's quite hard to put yourself in someone else's shoes if you haven't had their lived experience of that time.
Yeah.
And I think you and I were at an event recently where we were talking about the fact that some leaders in the financial services didn't have an experience of financial crash yet. So that kind of the actual kind of idea of experience versus sort of newer leadership. Do you think newer leaders approach uncertainty differently to the more seasoned leaders?
I do. And I think historically we sort of lived through credit cycles and there's a bit of a predictability to that. There tends to be a crash, then there's a lot of issues and things to clear up. Then austerity hits, and then after a while it gets back to a boom cycle and kind of it continues. People who have taken on their first executive leadership role, for example, in COVID, they were facing things that none of us have ever faced before, really. And it's quite interesting because I think that generation of people who, I guess in the last 5 years have been developing into exco leaders and chief executives, they sort of expect uncertainty. And, so much has happened since then as well that people may not have predicted. So I think there's a sort of mindset around that, which has probably taken some more experienced leaders a little bit longer to adapt to.
Yes, interesting. It's sort of a different type of uncertainty. I suppose permanent sort of uncertainty and COVID are quite different to sort of us all on that day back in 2008, sort of realising that everything was changing. Yeah. And I was just really struck by the idea that you could have someone leading a financial services institution that hasn't seen that cyclical nature in the market. But it was an interesting conversation about the fact that people are having to bring in, also from a cost perspective, having to bring in younger people into the institutions as well as try and keep the seasoned leaders at the top.
Yeah, and I think often in financial institutions in difficult times, having people who've worked through some of those credit cycles is a highly attractive thing.
Yes, so having the sort of the combination.
The combination, exactly.
Yeah. And alongside all of the volatility, we've sort of focused on it a little bit more before with a financial services institution. There's this high degree of regulation and complexity and risk management. And what do you think for people specifically in those sorts of regulated businesses, what are the sort of the biggest shifts or complexities that they're grappling with right now?
So I think the sort of deregulation is creating a bit of uncertainty. So particularly the the situation in the US, exactly how that will pan out. The number of people who've been actually cut in some of those regulatory agencies is quite significant. And so just seeing how that will filter through things like the changing reporting requirements potentially. I think all of that just creates a ripple around the world and a conversation for people to have. And at the same time, I think the reporting requirements on things like ESG, on data protection, they're all becoming more onerous, not less. So I think it's quite tricky for companies to navigate and to think about how best to actually staff those types of needs, especially when you're working in an international company.
I mean, of course, and there's AI as well. I mean, I can't really do this conversation without mentioning AI. And I remember sort of something that particularly struck me recently at a lunch where I was hearing actually a general counsel talk about a bank and the need for the people in leadership to understand the black box of what is going on within the AI and how it works and how the algorithms work is so important. And I think many institutions are still getting to, because they've been automated for quite a long time. And actually in a lot of new other sort of businesses, that automation is quite new, so people understand it. Whereas ones that have been going for a while probably don't quite know yet what's actually under the bonnet and how it works. And the speed at which they have to understand that now in order to ensure it's working properly and fairly.
Yeah, absolutely. And, a lot of the conversations that I have with leaders of financial services business about use of AI is still about productivity. But I think they have views on many other applications. There's a sort of reticence, sometimes a nervousness around how that will be viewed from a sort of regulatory perspective and making sure that the risk appetite is there for machines as well as humans, if that makes sense. So I think we'll see huge changes in terms of how AI will impact the industry for sure. But at the moment, as I say, I think it's largely around productivity. But I think in financial services, there's still work to be done on the digitization front as well.
And I suppose it leaves an area of industry that's ripe for disruption in terms of, you have the traditionals, institutions who are, as you say, working it through, and the new entrants into the markets. And presumably you look at all of those types of businesses in what you do. How are the more traditional institutions sort of facing into that disruption?
So I think if we go back quite a few years, I think initially some of the bigger incumbents felt probably a bit threatened by some of the new technologies, the fintechs coming through. And one of the reactions was to either invest in them or buy them, which had some success, but not in every case. I think where things have moved to is I think the fintechs have a better appreciation of the regulatory environment. I think the bigger institutions have got much better at partnering. And so things like the regulatory sandbox, which helps smaller companies think about what's going to be needed if they want to scale up, etc., and provide financial services. So where I see that at the moment is very much a partnership model. So the new technologies are accessible to customers of bigger institutions. And they are in turn able to kind of gain expertise and knowledge. So there are some fintech businesses, obviously, that have grown to very big scale. But in the main, I think, increase in the number of financial institutions who are kind of incubating ideas and people and technologies, and a better appreciation of how you can kind of collaborate across the system. So that the sort of challengers, the disruptors, they're always going to be there.
I'm interested in the idea of incubating people. Do you see a difference in the type of leaders you look at for the more disruptive businesses in the financial services? And again, I mean, it'd probably be a gross generalization, but do you see it? Are you looking for different types of people?
Yes, and I think they look for different types of people. To the point where, certainly we've had fintech clients who said, they just wouldn't consider someone who's worked in a very big institution because they wouldn't feel they'd have the right sort of cultural fit and affinity with that type of business. and vice versa. But I think what we've seen as those businesses have grown, as we see many, many more of them, there's much more respect for the talent and the experience between those two and kind of ecosystems. And so some of the best leaders, either in larger institutions or in the fintechs, have spent time on the other side, if you like. So there's much more of a cross-pollination of talent and a recognition that someone who's been in financial services for a period of time can be helpful in bringing a new prospect to market and vice versa.
And presumably, as you know these people, or you can advise as to whether someone you think can make the switch or not, I suppose, is the case may be. So
absolutely. Yeah. And I understand the reluctance. I think if you've always worked in very, very big institutions with, huge support teams and central functions, etc., then working in a smaller environment is a transition, but it doesn't mean somebody can't do it. So I think it's about understanding how people work. And as you say, just helping make that assessment on whether it's going to be the right move for the individual and for the organisation, and whether that sort of flexibility and adaptability is there, and often it is.
And talking about sort of your role, how do you talk to clients, and what are you talking to them about in these kind of uncertain times or this kind of market?
Well, not surprisingly, I guess because we see across the sector, whilst we're never going to sort of break client privilege, we can talk about trends and we can talk about what we're seeing. So I think clients are very keen to hear how their competitors, their peers are thinking about some of the kind of talent and leadership issues of the day. So hot topics of conversation are typically things like organisational structure, what people see as some of the emerging risks facing their businesses, how they're dealing with emerging technologies and changing business models, and some of the sort of fintech related businesses that you touched on earlier. Regulation is a commonly voiced concern, and the cost of compliance around that. And AI, I mean, clearly everyone is keen to understand what the best application is going to be. And I think that continues to be something that they're interested to find out from us, from the work that we do in that space in terms of appointing people who would be leading on that agenda, but also at the kind of leadership table, where is the discussion, even to the point of where is the kind of information coming from that's supporting, for example, board discussions or executive committees in terms of making sure their knowledge is at the right place.
And is the composition of the executive teams or the boards that you're looking at changing in response to that? Are you looking for different roles or different skills on those teams?
So yes, I think that has evolved. I mean, there are certain roles that you will always need in a financial institution and backgrounds to fit that. But certainly in areas like green finance, the sustainability agenda, technology, digital, AI, I think those are all areas where boards are really mindful of having someone who understands quite deeply those agendas. The challenge is often just making sure you have people who can still contribute across the whole agenda. So really, I think the role of a board member is obviously quite tricky, because anything and everything could kind of come across your desk in a way. So having a more rounded set of perspectives around the board is definitely something that we're asked to think about.
And presumably making sure that the board, as well as having those perspectives, is properly, as you say, informed, trained. It's a different way of looking at perhaps how they deal with the challenges coming across their plate.
Yes, and I think it's it's completely usual, obviously, that boards and executive committees would spend quite significant amounts of time thinking about those different topics, but actually speaking with and working out scenario planning around various issues as well. So
when we come in, when we advise at Odgers, we're helping often solve a complicated challenge or a problem. Have you got an example of where you've helped a client navigate a particularly complex challenge?
I think it's always difficult when you have an incumbent with a business that's perhaps not performing, maybe an individual who's not performing, and you've got to think about the circumstances around that. There are times where the right thing is to think about succession planning for roles, but not always is the person aware of that. So that can be sensitive, and it just needs to be managed professionally, sensitively. And so I think a lot of support in those situations so that the business has comfort that they're going about something in the right way and that they're being as transparent as they possibly can be and communicating with relevant people as and when they can.
Mm-hmm. And looking ahead now, what will define successful leadership in financial services over the next 12 to 18 months?
I think probably the leaders that are able to spend a bit more time thinking about the future. So, of course, the business needs to operationally run successfully. But I think the chief executive and the leadership team need to have that space to be thinking about those emerging risks, to be thinking about those opportunities and challenges and pivoting really quickly sometimes. So I think that's probably the thing that will define the businesses that go forward and grow and survive in difficult times versus the ones that sort of stick at it, hoping that something else is going to change and impact their success.
That's one of the themes that's come out actually in the conversations has been this idea that, the time to think is so important in that strategic mindset. I think it was described in a previous conversation we were having about being able to sit in a room for 3 hours without an agenda, but to be able to make sure you're hitting the most important things in terms of the future. So creating time to think, people always think it's not, in times of uncertainty, you're firefighting. So actually it becomes even harder to think strategically. And one of the other things we were talking about was in order to be able to create the time to think strategically, you've also, to a certain degree, got to stick to your knitting in terms of your actual basic business, run the business, stick to what you know. That sort of go back to basics, do what you need to do, but also make sure you're creating that time to look ahead and look around the corners.
Yeah, which is not easy. And, I think having the right team around you becomes absolutely critical, because if your chief exec doesn't have that headspace, then, that's not a good place to be.
Having a trusted team and knowing what the chief exec has to prioritise versus what the rest of the team are prioritising. What advice, I suppose, talking to your clients, would you give the boards who are continuing to prepare for this or are preparing for this continuing uncertainty?
So obviously our lens on things does come more from the sort of talent and leadership side of things. We are doing way more work in succession planning than we've ever done. So I think being really thoughtful about the talent in your business, how you reskill, upskill, how you retain, how you develop, how you recruit, obviously, but also ahead of time, what does your pipeline look like for each of those board and executive roles, the level below? How can you be thinking differently about how you prepare people internally for taking on some of those bigger roles in the future? And are you aware of the external talent? If you needed to make a change, do you know what you would do? Would you have a head start? So I think preparedness is really important, and people will create the success of a business.
And succession planning is a term that's bandied around quite a lot. And I mean, one knows what it means, but in practical terms, how far ahead would people be looking to succession plan? How far out? And sort of how, when people talk about pipeline, are we talking one person, two people? What kind of, do clients ask you that? And sort of what advice do we give around those sorts of things?
So I think different businesses have different levels of kind of maturity in terms of their existing processes and ways of thinking about succession. Sometimes it's extremely well thought through, and there's a lot of data around the sort of talent population. Other times, less so. So it's quite a tailored conversation. But I would say in general, almost as soon as the chief executive is appointed, the board are thinking about the succession. I mean, it's pretty immediate. because the average tenure of a chief executive is probably 3 to 5 years. So you got to be thinking about that pretty soon. And, you know, often there might be 3 or 4 internal possibilities, and you might be thinking about another 5 to 8 external possibilities in that example.
Gosh. And that would be the chairman working with the CEO or the people, the CHRO. How would that plan?
Again, that would depend on the organisation. But yes, often the chair would be thinking about it alongside the chief people officer, the talent team. Exactly.
And if you could give one piece of advice to a future CEO in financial services, what would it be?
So I do think it's about the people. I mean, you might expect me to say that, but get the right team around you. That changes everything.
Fantastic. Thank you, Anne.
Pleasure.
Conversation.